Hi there, welcome to GrainTV. It's Wednesday, February 24th. We had another day of red on the grain board. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, wheat continued to lead to the downside, setting new 5-year lows, losing 5 1/4 cents. Corn off 2 1/4, and beans only down 1 3/4. News today was pretty light ahead of USDA's Ag Outlook Forum on Thursday and export sales also on Thursday. In the meantime, we did get a flash sale announcement by USDA. Yet again, another deal for corn, with Colombia announcing that they would be buying 110,000 metric tons of U.S. corn. In outside markets, crude oil started the day again in negative territory, off again about $1 a barrel, but managed to recover after the crude inventory report by EIA was pretty much in line with analyst expectations, showing crude stocks were up 3.5 million barrels versus expectations of 3.4 million barrels. So that actually turned the crude oil market around from a $1 loss to about a 30-cent a barrel gain by the end of the day. In other news from EIA, we had ethanol production numbers. Those numbers showed yet again another strong week, somewhat surprisingly in light of the negative pressure we've been talking about in the ethanol market. But we did see production up on the week, 19,000 barrels a day to 994,000, and a reversal of trend where where ethanol stocks actually were lower for the first time in several weeks, falling 113,000 barrels to 23.1 million barrels. But this is off the record high of last week. Coming out tomorrow will be USDA's first look at 2016 numbers. Now these are not survey based. They're not surveying farmers. That number will come out at the end of March. But in the meantime, they will put pen to paper and try and guesstimate what corn and soybean acres will be in the coming 2006 growing season. For corn, most analysts expect USDA to show a higher corn acreage by a fairly substantial margin, up about 1.6 million acres versus last year, and soybeans up only about 600,000 acres. Again, those numbers will come out tomorrow morning as a result of the USDA Ag Outlook Forum. Let's turn back to the soybean chart, where we were talking about it yesterday, where we had a big move down yesterday, losing 11 cents a bushel, but today's move was much tamer, although still on the negative territory, losing 1 3/4. We continue to watch the long-term support here at 8.50. That was the previous lows we've established in the move back in early part of January and late part of December. The most recent move lower was around 8.60, and that's where the bears have to clear that benchmark of 8.60, that underlying support, to get us down to the 8.50. I suspect we will get there just because we have fairly weak fundamentals. We have South America's growing season all but wrapped up, and they're getting ready to ship fairly large quantities into the world market. We should see our export business dry up quite substantially in the coming weeks and months, and so I wouldn't be surprised to see us retest those lows, certainly at 8.60, and then again potentially at 8.50 before we get into the spring planting season. That's all we got today. As always, give us a call at Grain Hedge at 877-472-4607 if you have questions or need help in your own marketing situation. And as always, visit us online at grainhedge.com.